was there any cost incurred stroke estimated for completing and operationalizing this JV? Is that the question?
That is right. Absolutely.
Okay. So no, nothing apart from the
nominal legal fees and consultancy, nothing much.
Most of these costs got incurred in Q2, partly in Q3, and all of that was in relation to the legal fees and the advisory fees for putting the JV structure together and related activities. Not really significant. Beyond that, there was no cost. And that was not even envisaged.
There is no cost or there is no breakaway fee or anything from that. It was a mutually agreed dissociation. So there is no other cost incurred.
Sure. All right. Thank you so much. Okay.
Thank you, Vishnu.
You're welcome.
Thank you, sir. Our next question comes from Shivam Shah from SmartSync. Please go ahead.
Hi. Thank you for the opportunity. I have a couple of questions. The first is are we seeing any potential disruptions from any other, technology like cloud or internet? And the second would be there is from the Hollywood side, they have some sort of a JV, studios have come together and developed their own standards. So do we see any potential threats from that side? Like something of that sort happening here in India?
Not really, because as far as the films that are releasing in the cinemas are concerned, the Hollywood films are under VPF sunset as it is. So even right now there is very little impact on the VPF front for us. Advertising, whenever the films run in the cinema, we keep continuing to run. This is our agreement with the cinemas. So Hollywood really has no role to play in that perspective. So this consolidation at the studio levels doesn't really have much effect on our health at this stage.
And hi, Shivam, one more point which you asked, and that is very, very critical, and that was about technology disruption. Just to quickly tell you that since we are a B2B kind of offering, on the face of it, it looks like UFO service offering. And therefore, somebody may infer you are not really adopting to newer technologies, or you are offering what you were offering 18 years back. But that's not true. If you actually go in theater, you will find that as simple as the server, which used to be more in the form of a PC environment, now it is a handheld device. Okay. So what I'm trying to say is that unlike B2C, where Samsung, when it rolls out S8, S9, S15, S20, S24, we all know that, okay, they are upgrading and they are not Nokia. But in B2B offering, it is difficult unless somebody spends time with us. It is difficult for us to explain. This is probably the forum where I can speak. And for investors to know whether this company is really doing upgrades and catching up with the technology changes or no. So we have done this technology catch up both on the server front as well as on the projector front. And probably that's the reason why we are successful in last over 1.5 decades.
Okay, thank you. That answers the question. One last thing. How are we seeing the business as far as the caravan talkies is concerned? Can you please throw some light on that? Yeah.
So caravan talkies did decent business in Q3 and some business in Q4 also. In January we have been seeing. Right now the government is actively working on that, and there are some corporate clients also. And we hope to see business on this front going forward. I think state governments will adapt to it. The elections are coming up. They would be looking towards this. So we are pretty positive and hopeful on this front. Good thing is this business picked up. I mean, it was shut down for almost 2-3 years, and there was no empanelment. Right now we have got empanelment on that, and business has also started flowing in. And central and state governments have seen the benefit and impact of this vans. So we remain hopeful on this front.
Okay, sir. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Krunal Shah from Enam Investment. Please go ahead.
Hi, Ashish.
Hi, Krunal.
How are you?
How are you? Good. All right.
Yeah. So just a couple of clarifications. So this TSR deal that we signed, so TSR I understand is a network like ours. So wouldn't it already have some advertising contracts in place and some advertising revenue that will be generating?
Yeah. So you're right. They are also digital integrators like UFO Movies. They started in the south and they have a significant presence there. And
Right.
however, they do have certain screens advertising on already booked with them. And the understanding is that these deals migrate to us, though not significant amount, but that is the understanding because we pay them out from X date onwards, and anything pre-booked on those things will migrate to us.
Okay. So if I were to compare on a per screen basis, say like our revenue, say YTD is 2.5 lakh advertising revenue per screen, where would they stand, in terms of percentage terms versus ours?
So in terms of actual revenue that they would have done up till now, they might not be stacking up as well as what we were doing because we have a much more larger ad sales network and even the screen network is much bigger. But the potential of things is higher, and that is where we felt the need to come together and tie up with this. And as Ashish mentioned to the earlier caller also, this is an asset-light model for us. We are not investing anything in the equipment already entirely invested in by TSR. The maintenance of that is already by TSR on that front. So we just participate in the advertising rights over there, and that is the broad part of it. The potential is high on these things. I would not put the past track record as a benchmark for these things.
Okay, sir. Okay. And so just a clarification on the employee cost, 5.7 crore provision taken during the quarter. That would be for the last 3 quarters combined, sir, right?
Part of it is even for our next quarter.
Okay, part of it is for next quarter also.
We have built in some.
So, okay. So entire year FY24 is taken into account almost.
Not really. I think part of next year, as far as variable is taken, and as far as your advertisement sales incentive is concerned, it is still Q3.
Okay, got it. And just one more question. So we've seen good traction in the corporate advertisement revenue. Could you help me understand, what sectors, are using our platform majorly right now?
What is the question?
Okay, you mean the industries that are spending on us? Okay, so
yes.
Probably from Q4 onwards, we used to give these details, which we got a feedback are very useful to the investors to gauge who are spending more. But I would broadly say that apart from pre-COVID scenario, we used to have this satellite TV. The television channels used to be one of the major spenders. That segment has gone down. Just to answer, I don't have that information ready with me, and from Q4 onwards, I will start including it also in our opening remarks, so everybody has a reference to it. But quickly to tell you which segment has not come back, that is one segment which has not come back. What it is getting substituted partly, not fully, is with OTT. And that is a very interesting take because that is, can be viewed as a competitor for us, but they are trying to advertise on us. So they are recognizing that, we are a mutually exclusive kind of a mediums for entertainment consumption. Apart from that, the rest of the segments, unfortunately, I don't have data right in front of me, but I'll pull it and give it to you. But my hunch is that apart from that one segment, the rest have come back. Maybe real estate is one segment which has not come back. When I say real estate, some of these campaigns that happen at a regional and local level, those have not really come back. But let me do this comparison and come back to you. I don't have a ready information now, apart from the television channels data.
Okay, got it. And so just one more thing, just in the industry, we hear that the rural demand is very soft. how have you seen, ticket sales in your network of screens in the interiors?
Sorry, some part of your question I missed. Rural demand is picking up. How are we seeing?
No, rural demand has been soft. No, my question was rural demand has been soft. So just wanted to check, with you, how have you seen your ticket sales in your network for the movies in the last 6 months?
So we can indirectly draw an inference about ticket sales because except one segment which is impact, we don't really, as a business strategy, get into the even the revenues of either distributor or exhibitor directly.
Okay.
And exhibitor for sure, we don't really count as tickets for various reasons which we all know that they are not comfortable. But two things. One is rural demand softening or getting better doesn't really directly impact us majorly because cinema as such in India is not a rural phenomenon. All the screens that if you see and if you map it with pin codes, almost 90% plus, or 93% plus screens are not in rural areas. So I don't know whether the same kind of softening you're seeing in urban, I mean, as a overall phenomena, but in cinema we are not seeing it happening. In fact, even if you say key multiplexes, which obviously cater to a different segment, ours will be more or less same geography, but not really rural, which is absolutely dependent on agriculture and stuff like that.
Right. So my question is more on tier 2, tier 3 kind of city. So actually the inference I'm trying to draw was that, our advertisement revenue would also be to some extent correlated with the demand for ticket sales. And
which is true. And that we are not seeing dropping. I mean, it drops with, okay, let us put it this way. If you have a good movie, perceived it, people just go and block tickets over weekend unless there is a negative mouth publicity happening on that movie, it will continue. Which means people want to come out and spend. Okay? And vice versa, if there is no content, like for example, October, November or currently Jan, mid-Feb, the content is weak, that time you will not find, unless somebody is a diehard fan or somebody really wants to go out, people will not come out. But that cannot be an inference that it is a softened demand. It is more to do with the quality of content coming out. It could be both regional and Hindi.
So while the footfall or the admits, as they say, is linked to the fate of a film, what definite trend that we are also seeing is the quality of cinemas, the multiplexes that are opening up in tier and tier 3 towns, and even at times even in tier 4 levels, the smaller multiplexes are opening up. That is a very healthy and positive sign for the business because cinema viewership is there. That is where the latent demand is there. And
got it.
There is a definite growth in tier 2, tier 3 towns for these cinemas. So wherever cinemas closed down in the past, also newer multiplexes, newer screens are also opening up.
So the only major advantage for all of us in cinema industry is that the unique viewers of cinema, various estimates are there, but probably none of the estimates goes beyond 8 crores or 9 crores. So in a country with a population of 140 crores, obviously at least technically 30-40 crore people can afford to go to theaters, correct?
Right.
If they are not going, that is only and only because the availability of cinema screens around them is not there. So that is a major point, that there are only 8-9 crore unique viewers who are putting together, maybe 10-12 crores, putting together 90 to 120 crores of ticket sales.
Got it. And in terms of advertisement revenue, what kind of a sustainable growth rate that we expect over the longer term?
Sir, I would say we have just got out of a super major shock, and people will wonder why we are referring to COVID, but for cinema industry it was probably a longish shock than others. Everybody else came back on track and saw super demand, pent-up demand, but nothing happened, especially in Hindi-speaking market for a long time. 3 quarters, good. Some of the beliefs that we had are getting vindicated, that cinema viewing cannot be substituted by small screen viewing, either handheld or television. Movies will not directly go on OTT was the second belief that we had, but our belief remained with us till such time it was validated. Third belief, which is now getting validated, is if the people go back to cinema viewing, cinema is a wonderful and a very effective medium for advertisers to carry their messaging forward in the form of an impact medium. So that is also getting validated. Fourth, we wanted to validate whether if central government really doesn't support this in cinema advertisement, whether we will be able to push the second engine of corporate and still be able to continue the growth. That is also happening. So what we are doing is we are really not living by the day, but more like trying to look at it quarter by quarter and picking up the positive sentiments going around. So a little early for giving projections and estimates.
Got it. Thank you. Thank you, Ashish. Thank you, Rajesh. Thank you so much.
Thank you.
Thank you, sir. There is a follow-up question from Aditya Karant, an individual investor. Please go ahead, sir.
Hi, thanks again. Maybe just a couple of follow-ups. Your kind of key metric, one of them is this number of minutes sold per show per screen. So this is almost recovered to your 2019 levels, right? So you have about 5.3 minutes versus 5.5 in 2019. Can you explain what drives this metric, and do you think that this is the peak saturation level of this metric, or similar to revenues, we should not expect this to exceed 2019 levels, this 5.5 minutes sold, or do you see this kind of increasing going forward, and why would it do that if so?
So I think
and then maybe a second, go ahead.
Yeah, I tried addressing it in one of the previous questions where we were trying to estimate what is the possibility of this network to deliver. And answer is no, this is not correct that it cannot go beyond 5.3. The better networks deliver more than 18-20 minutes average. And that is known to all of us. We go and see movies in those theaters and we see advertisements. So certainly that is one of the major, kind of an opportunity for us. And consequently, the revenues should keep going up. And the only thing that can be questioned is once we reach a stage of say 10-12 minutes, then there will be questions around what kind of growth we are seeing. But currently we're really away from reaching a saturation point, in our belief.
Okay, so 2019 was not peak. It was just COVID happened and therefore you saw it down.
Yeah, because see, you have to have only one answer for yourself, what number of minutes you think this network can sell. If say a premium multiplex sells average 20 minutes, what would this network sell? 20 minutes, 18 minutes, 15 minutes? That would be an upper cap in your mind for the revenue. And then the spot rate is something which we'll all have to wait and see how it plays out.
Yeah, I mean the question is actually that if central government revenue doesn't come back, which seems like it may be, they will not spend 1,000 crores like earlier. What is your kind of network capacity to sell ads? I think that's the question.
Yeah, so slowly we wanted to, for a long time we wanted to disengage from dependency on central government. Unfortunately, we were pushed in this situation a little early. But more important question is whether, I'll repeat, whether from 5 minutes inventory of 10-12 minutes first can be sold, can be consumed in those screens, and if that can be consumed there, obviously I don't think that there is dearth of advertisers who would want to spend there. If actually this medium is positioned and proven, which was the case pre-COVID, we were almost there.
Okay, got it. And then just last question, ad prices, again, they've been trending up nicely this quarter as well, but it's below the 2019 peak. Just can you just explain how the industry looks at this? Is that ad pricing at peak levels? Will it exceed 2019 levels? Just some industry context on like what's happening maybe with Cube and how do you compare with that? And then second on that is TSR's ad pricing per minute higher than yours, or are they lower quality than yours?
So the spot rate is one area where we have chosen to not get into discussion on open calls, because that really hurts the business, because the medium is such that varied rates get offered to various customers. And probably that's the reason why everything else is there absolutely transparently from our side, except the spot rate, which could be derived. But we don't put it and we don't really discuss it. So we would choose to continue with that. But generally our network currently is getting sold lower than premium multiplexes for obvious reasons, and that kind of a gap would stay. But that would get bridged to some extent, but there will be a gap between the pricing of ours and pricing of premium multiplexes.
Okay, thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Jay Sundalia, an individual investor. Please go ahead. Please go ahead, sir. There is no response from Jay. Shall we move on to the next question, sir?
Yes, please.
Yeah, sure.
Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. There are no further questions. I now hand over the floor to Mr. Tushar for closing comments.
Thank you. On behalf of Ventura Securities Limited, we would like to thank the management of UFO Movies and the participants. Good day.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a good day.